Equity Mates.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Welcome to another episode of Equity Mates, a podcast that follows our journey of investing. Whether you're an absolute beginner or approaching Warren Buffett status, our aim is to help break down your barriers from beginning to dividend. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you going?
I'm very good, Bryce. Good to be back for another Monday episode. The countdown is on to so many things. We are, well, as we're recording this, we're 4 days away from the AFL Grand Final.
Yes.
We're 10 days away from your wedding.
Yes.
We're, less than 30 days away from FinFest.
It's all happening, Ren.
The big three, they say. The big three events that tell us that spring and summer is just around the corner.
That's it, Ren. Super excited when this episode airs. I will be getting married at the end of this week. I cannot wait. It's going to be another big party. So it's all happening. Hopefully the Cats will have won a flag. I don't want to jinx it. And FinFest tickets are selling fast, Ren.
I will have everyone know that Bryce, if you watch the replay of Swans Collingwood on KO, you can see Bryce in the crowd.
That's it.
He was supporting the Swans.
I was supporting the Swans.
Yeah.
And I was in the middle of the Collingwood crowd, which takes some balls to do.
There were so many Collingwood fans.
They're great. Anyway, That's it. We're hitting a big show today, Ren. We'll start off with what we've learnt this week. Specky McGee returns and a new type of episode on The Dive that we're really keen to give you some insight into. So stick around for that.
Specky McGee was just relentless on the forum, on our Equity Mates community forum, asking to come back on. So we figured we have to get our thirstiest guest back on.
Yes. He's been stinging for it. But Ren, just quickly, first release tickets are running out at FinFest. We'll soon be moving to our last release. They're going to be $67. So if you want to grab one at $47, now's your chance. First in, best dress for some of the best merch in the business as well if you come early. Program and speaker is on the website. It's all happening. A massive thank you to Stake, who are our headline sponsors, as well as Magellan, CoinSpot, and Weno, all majors. So couldn't have done it without them.
Yeah, well, we haven't done it yet.
That's true.
So let's not speak in the past tense because who knows what happens.
Couldn't be doing it without
them. There we go.
But
Bryce, let's start as we've been starting the last few episodes, what we've learnt this week.
Yep.
And all I can see in our shared Google Doc from you is just diversification works. Good that you've learnt that after 5.5 years of doing this podcast. Tell me more.
Well, before we jump into that insightful comment from me, I did want to actually chat about what I genuinely learnt this week was a little bit more about the insurance industry from a fascinating conversation we had with Maroon and James from Fidelity. But I don't want to go into that too much because the episode is actually coming out this week. So stay tuned. That's a bit of a teaser. And if you're interested to know why they're interested in the insurance industry at a time like this, it's a fascinating industry. And then maybe next week I'll touch on it. Because it's not an industry I often... Are you invested in insurance?
I mean, through ETFs.
Through Berkshire.
Through Berkshire, yeah. One of the world's biggest insurers.
Yeah.
Not outside of Berkshire and ETFs... No.
Yeah, it's not even something that really interests me. I've never really looked into it, but it was interesting to hear their take on it.
For me, it's like you need to understand insurance. Like, obviously you need to understand whatever you invest in, but like you have to be in the weeds of how everything moves on that balance sheet.
Yeah.
And I can say that I'm not.
Yeah.
It's an interesting one, though. Like, Andrew Brown has spoken a bit about insurance in his time as well. Are you?
No, and it's something that doesn't really interest me. So it doesn't nothing's on my watch list. It's to your point as well. Listening to the guys speak about it, there's multiple layers to how they make money and how their balance sheet works.
Yeah, well, James spoke about this feels like such a tease given the interview's been out for a couple of days, so we should stop talking about this. But he spoke about like the three ways they make profit.
Yeah.
But for me, whenever I think about insurance, I just think like, there's a lot of issues at the moment, like floods, fires, like all these weather events. It feels like a bad time to be in the insurance business. But I guess that's why they have actuaries that
figure that out.
Out
Or
the
they just stop
pricing of it all.
insuring.
Yeah,
Yeah.
that's a whole other issue. Anyway,
diversification works, Ren. Why do I say this? Why did I learn this week? I logged into my superannuation account.
Okay.
And the way that I have my super set up through Superhero is
Not sponsored.
and not advice. I do the setup where I can control, I think, up to 75% of my investments. 25% automatically goes into a diversified balanced index.
Okay.
And that 25% return versus my 75% return.
Oh, you're getting blitzed by the...
I am getting blitzed in my investments.
Do you have the numbers?
I'm getting blitzed, but I
Okay.
do have a fair bit of leverage in my
You've
own
done the
investments. I've got G-Gas and Gear. Yeah.
Not advice?
Not advice, but I had a look at because when we'd spoken to our mates about the offering that Superhero does, there was a lot of nervousness from our mates around, do I know what I'm doing? Do I have enough experience to take control? All of those sorts of things. And we kind of felt like we did, but this ETF that they're invested in has done its job. It's only down 10% year to date.
And it's not just diversified across stocks. It owns property and bonds and stuff like that as well.
Yeah, so it's the underlying index is the Vanguard Diversified Balanced Index. VDBA is the ticker, and you're right. It's across multi-asset, multi-country. It's diversified.
Just owns a whole bunch of other Vanguard ETFs. It's like an ETF of ETFs.
Yeah.
Yeah.
Yeah. So really, it's what's the learning here? That
Diversification works.
Diversification works.
No, sorry. The learning here is that you suck at investing your own money, and that your retirement fund has suffered as a result.
Yeah, it's suffered. But let me tell you this.
Please do.
When we hit a bull market, my super is going to rip. It is going to rip something, and I'm going to come back being like, diversification doesn't work.
Yeah. Get this balanced option out of here.
Yeah, who wants this?
I mean, the thing is, you can allocate more to the diversified balance index. Yeah.
You can. But look, I have such a long-term horizon on this that I'm super comfortable with the strategy that I've got, and I just recognize that we're in a cycle in the market where something like a Vanguard Diversified Balanced Index should be performing the way it is, and my other investments are probably performing the way that you would expect in a market like this.
Your portfolio is exactly where you want it to be.
Exactly.
Down 20%.
So the learning here is I'm actually a really good investor.
Well, I mean, as much as we joke about it, it's like understanding how assets should work at different times and being okay with that is the hallmark of a investor that will be able to sleep well at night.
Yeah.
Yeah. That knows that, if I put some money into a triple leveraged ETF and the market is down 20%, the ETF will be down even more than that. And I'm okay with that.
So Ren, just to close out before we move on to a very small second learning, and for those that are interested, the fund that I'm talking about is just a mix of underlying Vanguard funds. So they have a bond index, which is their largest holding, Australian shares, fixed interest, international shares, and small cap and emerging markets.
All right, so Bryce, you learned that diversification works. Mine was less about a concept, but it's actually something that I've done, which is, have you noticed that more and more brokers are offering auto invest now? So for people who are unfamiliar with the term, it's basically you tell the broker that you want to set up, invest X amount of dollars a week into Y assets for Z period of time. And then it will just continually execute that order. It's basically automating dollar cost averaging.
Yeah, awesome.
More and more brokers have set it up. So if you want to find a broker that does it, simply Google it. It's not about there being a particular one that's best. It's functionality is the same. But I've set my brokers up. So, I have 4 brokers. Mm-hmm. Must be nice. And now I'm clearing everything out of one and just setting it up as my DCA index ETF.
Hang on, so you're selling everything?
I only had 2 stocks in there. One that was up, one that was down. Not that matters.
Okay.
But clearing those out and then making that just a index DCA, never need to check it broker.
Okay. Does that mean all of the index and ETFs that are in other brokerage accounts?
They're getting sold.
Really?
Yeah.
Why?
Well, I
What
recognize
about the capital gains on that?
I recognize some capital losses this year. Some of the indexes I've only bought recently, and so they're down. Well, like in the last couple of years. But it's just like I just want to set myself up for like 10 years from now, everything being easy, and having like different ETFs in different brokers is annoying me.
Okay.
Like I've got, and also like the overlaps getting a bit silly, like having S&P 500 ETF in one broker, having a NASDAQ 100 ETF in another broker is just silly. Yeah. And then also owning like Google and Microsoft as individual shares. It's like, what am I doing here? Yeah. So it's just like a couple of weeks ago, I got on the podcast and spoke about getting my savings sorted. Mm-hmm. Now I'm sorting out the brokerage accounts as well.
Financial year 23, big year for you.
I know. It's great. Well, now that we're doing this full time, I don't have other things distracting me, so I can think about it.
Fair call. So you're going to have one broker set up with dollar cost average into just a set bunch of ETFs. Away you go.
Yeah. So right now I've only set it up with two, an S&P 500 ETF and an ASX 200 ETF, just to get the functionality, understand if there's any nuances or anything that I need to be aware of. But over time, I want to have like my core portfolio just automated away. Yeah. And then if I want to add more to it, I can send extra money to that broker and put it in on top of that. Yeah. But just like a consistent core ticking over. Yeah. And then I can do satellite stuff in these other brokers that give me access to other markets and stuff like that. The question becomes, and I don't expect you to give me an answer, but the question I'm considering now is, what's the right set of core ETFs? Because it's like, do you just go, you were just speaking about how much you love this balanced index one, and like you could just. I
didn't say I love it.
True. You said that it's outperformed your superannuation fund. That's factual.
That's
not
factual.
Opinion.
Yes.
Or is it, but then, if you just do one, then you're going to be overweight the US because all those international ETFs are like 70% US stocks. Mm-hmm. So then it's like, do you do US, Australia, do you do a Europe one, Asia, but then Asia's overweight China or Japan. So do you, anyway, I'm just trying to figure out like what the right mix is.
Well, there's no right answer to that, bro.
No, I know.
Yeah.
But it's like,
the way I approached it was went and did research on how a lot of the stock spots and a lot of these auto advisors and the way that Vanguard and stuff like set up, like what do they classify as high growth? And then I'll look at like the split between property, because I've got like a property index, I've got emerging markets, blah, 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 and have the same sort of thought, like how much should I be putting in each?
Don't put in emerging market ETFs.
Why not?
Oh, this is a whole separate conversation, but like the market cap weightings in emerging market ETFs are not problematic, but it's not great because you get a lot of the like old school industrials that are like really high market cap but low growth. But what you actually want when you want emerging market is you want exposure to like the thematics of like an emerging middle class or an emerging local tech sector and stuff like that. And a lot of the times the market cap weightings don't account for that. It's a little bit different depending on the emerging market index because some have like TSMC and Samsung as the biggest holdings. But yeah, that's always been the criticism of emerging market indexes.
Yeah, fair call. But anyway, to close that out, Ren, I think the way I sort of thought about it was just getting a sense of how others allocate and build a portfolio, and then I kind of just did. But I've got things in there I'd rather. It's controversial because I have both, but I'm starting to lean much towards like the FANG Plus, which is just equal weighted top 10 NASDAQ rather than NASDAQ because like the returns come from those companies anyway, and I'd rather have equal weight to all of them than. And so that's how I kind of think about it. I'm now like, do I even need the NASDAQ one?
Yeah. It's interesting. And then like all the thematic conversation as well. Like,
do you want
a dollar cost average into thematic ETFs? But then it's like then your core portfolio becomes too many ETFs.
Yeah.
So anyway, that's what I'm doing now. But I guess what I wanted to bring to the table in what I've learned this week is just about using the functionality of Auto Invest. Yeah. More and more brokers, wherever you are in the world, more and more brokers are offering this functionality. So it's worth giving it a Google and then thinking about how you can automate your portfolio and get on with your life.
Yeah. All right, Ren. Well, it is that time of the episode. We're really excited to get in Specky McGee, who returns hot from a trip in Europe.
And if people don't know who Specky McGee is, let's take a quick break and collect ourselves, and then we'll introduce him when we call the Specky hotline.
All right, Ren. Well, we're lucky to be joined by Specky McGee. He's returning to Equity Mates, who has his finger on the pulse for all things Specky stocks.
Yes, he runs the Specky hotline, which has been a great source. I was going to say of information. I'll say a great source of fun and an okay source of information over the years.
Yes.
Bryce, I think let's call the Specky hotline and see what's coming across his desk.
200,000 shares Blue Star at 19.5. Can you position it in one of your equity funds? Listen, Blue Horseshoe loves Blue Star Airlines.
Hello. You've reached the Specky hotline.
Yes. Happy birthday, Bryce, and congratulations on the superior AFL team runners.
So, doesn't have an original stock in his life and doesn't have an original segment opening in his life. Specky McGee, great to have you with us.
Hamish and Andy, if you're listening, we recognise that was a full rip-off. So
and we had nothing to do
and
with
we had
it.
nothing to do with it.
All right, Specky, how's it going? You told us that there's some hot things coming across your desk.
Yeah, a lot coming across my desk lately. Thanks for calling the Specky hotline. It's been a while since you've called, so good to hear you guys' voice again.
Where have you been?
I've been prepping for FinFest.
Oh, nice.
You're gonna be there.
at FinFest.
Yeah, I've bought my FinFest ticket and hopefully looking forward to seeing some Specky McGee's there on the day too. The
Yeah.
strongest and loyalist community in investing.
Okay.
Specky
But how,
McGee's.
if your identity is to remain anonymous, how will we know?
TBC. Let's just say we've got something in the works.
Well,
Okay,
there
nice.
was QAnon, obviously, and then in the NFL...
Don't associate me with QAnon here, Specky.
In the
It has nothing to do with
In
QAnon.
the NFL, there's now Tua Anon, which are people that believe in this quarterback, Tua Tagovailoa. Maybe we need like Specky Anon or something like that.
Okay. Interesting. Well,
Anyway, he's brushing that off.
I've come with the stock today, guys. I know you've been asking that. Well, that's why you've called the Specky hotline.
Yeah,
Yeah,
absolutely.
yeah.
Yeah.
You want some insights.
Yeah.
So, I'm going to turn it back on you guys and ask you a question. What's something you've done more of in 2022 that you didn't do much of in 2021?
Go outside.
Oh, good question. Yeah, socialize.
Make good podcast content.
Socializing, yep, similar to partying. So,
Okay.
Warren Buffett said, you want to invest in what you know
Yeah.
and nothing more. So, I know you guys both love partying.
That's true. Yes, that's very true.
Oh, you know us so well.
Yeah, Bryce has been spotted by the Equity Mates community partying in King's Cross before. I know that.
No, I was
weren't you-
spotted at Macca's.
Yeah.
Which indicates partying.
Post partying. Yeah.
Post partying.
And Ren's obviously gearing up for a big party this Saturday, potentially.
Yes.
Potentially,
Yeah.
yes.
And this is being recorded
This will be-
pre-grand final, which is what you're
Yes.
referring to.
So either congratulations or commiserations. Either way, you should probably party. So where am I going with this?
Yes.
Where are you going? Yes.
Okay, so the company is called Party City.
Okay.
Okay.
Party City. It's been touted on some Reddit communities as being the next meme stock. the
Right,
next
okay.
big meme
Where's it
stock.
listed?
So New York Stock Exchange, ticker PRTY, relatively small. We got 211 million market cap, trading at $1.87 at the current time. Down from 52-week highs of $9.21, so it's dropped off a fair bit. Yeah, it's dropped off a fair bit.
Oh, so just for context, about 80% down.
It's about 80% down. Yeah.
It was trading at $22 about 8 years ago.
So
Damn, Americans stop partying, I guess.
So what does it do?
It's not that they just stopped partying. So like quite a bit has happened to this stock. Like if you look at the chart, it's all over the shop. It's
That's a specky.
yeah. So what's happened is there was a helium shortage in 2019.
Oh, really? Before
yeah.
all these supply chain issues?
Yeah, COVID in 2022 obviously rocked it. Not much partying going on. Interest rates this year hikes. And then again, there's currently another helium shortage.
Really?
yeah.
Wait, why are we investing in Party City?
So-
Why are we
okay,
investing
so-
in helium?
Yeah, I know.
So what does Party City do?
Good question.
Party.
So, they party. Yeah, what the heck? Next question. So they sell party goods like balloons, costumes, decorations for parties, like almost 1,000 stores across the US, Canada, and Mexico. Online store as well. They also do wholesale distribution across the globe. I read that their online website only accounts for about 18% of sales, so there's like a bit of a growth opportunity.
Okay, we're not here for the fundamental analysis. We want to know why this is going to be a meme stock.
Yeah, I did a bit of a deep dive into it, and then I was like, oh,
Don't hurt yourself.
the deeper I dove, the less I liked the company. I'm like, they've got.
But you could say the same thing about GameStop, about AMC,
Yeah,
about
true.
BlackBerry. What are the other meme stocks? Hertz, Bed Bath and Beyond.
Yeah. He's got something like $2 billion in debt, but there's a whole lot of like threats and like a lot of people on Reddit saying it's on the verge of bankruptcy. But like a lot of these big companies aren't. That's why they're shorted so heavily. But people back them, in the off chance that they can 10 bag.
So is that the story, that this is the next short squeeze?
I looked at the short charts and didn't really find it like high up the rankings in terms of shorts. So I'm not sure if
Okay.
it's a short squeeze.
So then why is it a meme stock? Because it's got
Yeah.
party in the name?
I think that has a lot to do with the name. So I did a bit more research, like what are people saying on different online communities, and there were a few posts that stood out to me, like on Small Street Bets. Someone
I've never
said,
heard that. What's small?
so you've got Wall Street Bets, then you've got Small Street Bets. And the title is "Party is slowly mooning and we're being silenced." So his theory is the mods are shutting down Party and not letting it build the traction.
Okay.
People are really hyping up Halloween coming up.
Yeah.
Okay, so this could be timed well. Maybe it's priced in, maybe not. They just hired 20,000 new employees in the lead up to Halloween.
20,000?
Yes, yeah. So
And they're about to go bust.
maybe
Wow.
they can't pay their debt. But my favorite post, so there's its own subreddit called Party House where they talk about it. And the post is, this is a shit post, but today a pink balloon landed on my front lawn. Not a single other balloon in sight. I'm quite a superstitious man, so I took it as a sign from the stonk gods to stay long.
Nice.
Right. I just went to the Reddit Party House and there's no posts.
PRTY.
Oh, okay.
Nice.
Okay.
This
This guy
guy
knows how to
knows.
navigate
This
Reddit
guy
like the
knows.
best of them.
So as an REI rocket emoji indicator, 0 out of 10, where do you feel like this is sitting at the moment?
So I think it's around 3 or 4 REI, but with potential to increase because it hasn't quite infiltrated the Wall Street Bet sub yet.
Nice.
It's sort of on the ancillary, smaller investing penny stock subreddits, Small Street Bets.
Yeah.
But people, the theory is once it builds traction and starts, reaching the 3 million subscribers on Wall Street Bets, then it's really
Away you
gonna
go.
moon.
It's
Wow.
Nice.
We're
Well,
getting pre-Wall
there is
Street
some-
Bet
Yeah,
information.
this is why we call
Yeah.
the Specky
Have you
hotline.
done some due diligence on Wall Street Bets though? Done a search? Say what there's. If
No
there's
one's
any.
talking about it. Yeah. Absolutely
Wow.
no one's
Wow.
talking about it.
Well, you
so-
should start.
Yeah.
You should start.
Maybe
Lead
they're
the
getting
trend.
sideways.
Becky
This is
McGee's should
just-
not be
Yeah.
silenced.
Yeah, so we'll see. Like, it'll be interesting to see what happens in the lead up to Halloween.
Yeah.
Like, my prediction is probably nothing will happen, but everyone's like, oh, Halloween's coming up.
Well, yeah, a lot could happen
You should
post.
start a subreddit, Specky McGee's.
True. Actually, maybe I will.
Nice. Well, that's why we call the Specky hotline. A hot reminder, though, that anything that comes out of Specky's analysis and due diligence should not be taken in any way as financial advice.
Let's just say there's an inverse Kramer tracker that tracks Jim Cramer's stock picks,
Yeah.
and that's done very well. I think inverse Specky might have done better.
That's it. Well, if you want to keep up to date with what's going on in the world of Specky McGee, the Specky hotline and Specky McGee's, make sure you follow Specky on Instagram. What's the handle?
It's Specky McGee, SPECCYMAG EE.
Love it.
Yeah.
it. Thousands of
Join the
followers over
thousands
there.
of loyal.
Yes.
Strong.
Loyal followers.
Best Fin meme account.
And if you-
he's on the Equity Mates forum a lot. He might make this subreddit. He might not.
So do you have a closing or shall we just hang up there?
Well, how about you guys? Have you come across any speckies lately? We flew it back on you.
We're hanging up there. Lovely to chat with you, Specky. We'll pick it up next.
Hold on. So I did mention Digital Wine Ventures last time I was on. So this is 6
Yeah.
months ago.
Yeah.
You might recall.
We should keep a track of everything you've mentioned.
I think I track it. I didn't recommend Digital Wine when I came on. I just thought it was interesting. The guy was making bets. Yeah, it's bombed.
No, I'm pretty sure you were defending it, and Bryce and I were saying we've looked at this one and we think it's a dog.
Yeah, but I told you about Microsoft.
You got Microsoft pre-Wall Street bets.
That's true. Anyway,
So
let's...
some of the other ones, we had eye candy. Was that one?
Eye Candy.
Banano?
That's it, yeah. Good memory. Eye Candy, Banano, Digital Wine Ventures.
Yeah. What was the first one, though? Was it eye candy?
Eye Candy.
Okay.
Yeah. So, yeah, thanks for having me on, guys. Keen to come back on again soon. Can't wait for FinFest. Specky 15 if you want 15% off.
Nice, love it.
Nice.
And, yeah, just the final bit on party. I did read a bit of analysis by Andrew WK.
Nice. Well, great chatting to you, Specky. We'll leave it there.
Why didn't you do sorry for party, Rocky?
We'll leave it there. Anyway, Ren, let's keep moving. It's great to hear from Specky, as always. Looking forward to hearing him come back on.
I don't know how we can move on after that.
We have to move on. We've got one more segment to go, Ren, and that is the Dive News headlines. If you're not listening to The Dive already, which is our business news show, make sure you go and subscribe. What we've been doing is a deep dive on one interesting business story 3 times a week, Monday, Wednesday, and Friday. And now we're adding a sweetener on top, which is the business headlines.
That's right, a companion episode under 5 minutes, 3 of the biggest business news headlines around the world. A fun fact, just something to keep you updated with the stories we can't cover on The Dive.
So there you have it, business headlines from around the world. Ren, it's always great chatting stocks. Plenty happening in the Equity Mates network. As always, can't wait for FinFest, and we'll pick it up next week.
Sounds good.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.